Hi everybody, welcome. This is Dan Sheridan from Sheridan Options Mentoring, and we welcome you here today. And I'm looking at a couple trade ideas in Tesla. These are a few trade ideas that I'm looking at in Tesla. And the first one for earnings tonight. And as we look at earnings, they're mainly a binary event, meaning it's up or down tonight, right? And it'll open tomorrow up or down. It doesn't mean where Tesla's going to be in a year. It's just for one day. The expected move here, as I look at Thinkorswim, they're saying there's about a $45 expected move. What does that mean in English or Spanish? It means there's a 68, this is like a one standard deviation, 68% probability we could be up 45 points, down 45. But again, it's a crapshoot. It could be a lot more, it could be a lot less. So here's a couple ideas. If I didn't think it was going to move, well, that much, right? Or I didn't think it was going to beat the expected move that much, but here's something that gives me a lot of room, right? Here's a couple ideas I was looking at. So number one, here's an iron condor. So I go to April 30, which is Friday, and I sell the 8:30 calls and I sell the 6:50 puts, right? And then I buy my hedge 10 points away, and I could do this all for $1.50 credit. They're 10 wide credit spreads, so I have $850 of risk. So if I wanted to risk $1,000, I just do one. I have to take the assumption, hey, I could lose it all. This is earnings. It's a crapshoot. So I limit my capital in it, right? Whereas if it was an SPX, I might do 10 or 20 iron condors because I can adjust them. Here, there's going to be a big gap. But if you look at right now, Tesla's trading at 736. So I'm selling my call about 100 points up. I'm selling my put, this is the 650, almost 100 points down. So the expected move is 45. This is about 2 times the expected move. So I think there's a high probability that I'm going to make my $150 divided by 850 overnight, which is whatever that is, 1,550 divided by 850. It's like 20%. But again, I don't get too exuberant because anything can happen. But I think this would be a high probability trade that would give me twice the expected earnings. And for a very good 20%. What if I want to go for the home run? As they say, go for the fence. So if I want to take, again, instead of $1,000 on a high probability trade that has a much better probability of winning than this next trade, let's say I'm bullish on it, right? I look at Tesla and say, unlike Google and Microsoft, which are going to have earnings Tuesday night, both of those are near their all-time highs in the history of civilization. Tesla's traded up to 900 in late January, and it's at 736 right now. So, but what if I was bullish on Tesla? Again, the expected move is about $45. So let's say I place for another $1,000. Let's say instead of putting $1,000 into the iron condor, which is going to be a higher probability of winning but less yield, what if I want to go for like 100% yield or more and still risk that $1,000? So if that's the case, I'm going to do 5 butterflies. So what I'm going to do is place the short strike. A butterfly is basically a 1 by 2 by 1, right? But I'm going to do it 5 by 10 by 5. And I'm going to place my short calls at the expected move. This is April 30th. They expire this coming Friday. And I'm going to place it at the short strike of where I think it can go, which is like the expected move. And then I'm going to buy my hedges around it, 760 and 800. Each one of these butterflies is going to cost me about $2. So if I buy 5 butterflies, again, I can do 5 butterflies or 1 iron condor. The iron condor has a lot higher probability of getting my money, but here you're swinging for the fence. On an investment that's $1,000, you can see if Tesla's even in this range of like 770 to 790 in this area, right, as we get through, tomorrow at the opening, if you look at the P&L here, if you just kind of bring it across to here, on $1,000 investment, we can make almost $3,000, right? If it comes in that window. Now, it could go down and we could get nothing. It could, the one good thing about this is Tesla's got 3 days of trading, Wednesday, Thursday, and Friday after. But anyways, the conclusion is the butterfly is going for the home run, the fence, that's $1,000. Another $1,000 of risk going into the iron condor, not 100 or 200% or more, but 20% in higher probabilities. Again, this is a binary event. Do I think it's going to beat expectations or not? It's a crapshoot. Risk management, as always, is the key. Check us out at SheridanMentoring.com. We've got a great, really good class starting tomorrow. Check it out on SheridanMentoring.com as well as all our other goodies. Have a wonderful day. Thanks.